Let AI take care of the job of earning money.
Hi, everyone. Today, we are going to give a complete guide on how to design an automated trading strategy from scratch. Before we begin, just a quick reminder. If you want to pursue AI trading strategies, you don't need to be a programming expert or even know how to code. However, you still need to have some basic knowledge of trading. For example, you at least need to understand candlestick charts and the basic mechanics of indicators. If you want a quick introduction to these basic concepts, you can refer back to our series of videos. We'll be using a few tools to build our AI trading strategy. The first is ChatGPT, and the second is TradingView. Even if you haven't used ChatGPT before, you've probably at least heard of it. With its powerful AI capabilities, it can help us write complete code. This is why we keep emphasizing that, even if you have no programming knowledge, a good AI can still take you to success. ChatGPT isn't the only AI master. You can also choose any other AI tools you're comfortable with. The second tool, TradingView, is a charting software. In addition to charting, TradingView also allows you to design indicators and strategies by writing code. Additionally, it also has the ability to automatically send trading signals. TradingView has the highest market share in the cryptocurrency world. However, for those trading forex margin, they might be more accustomed to using MT5. The specific tool doesn't really matter, just choose one that you like. Now let's use these two tools to design a trading strategy. All trading strategies come from observation, finding high probability patterns within the ups and downs of candlestick movements. The most skilled traders often rely on chart analysis. By observing charts extensively, they develop an unparalleled market intuition. This intuition is far more accurate than any indicator. But we don't have the luxury of time to solely develop this skill, so we had to rely on indicators to design workable trading strategies. Let's start by designing a trading strategy using the simplest tool, the moving average. If you already understand the definitions of SMA and EMA and the differences between them, you've probably also heard that if the current price is above the moving average, it indicates a bullish trend. So is it possible when the price crosses above the EMA, and the EMA is also trending upward, it signals the beginning of a bullish trend. Let's also combine what we learned previously. The EMA responds to trend changes faster than the SMA. Since we're aiming for short-term momentum trading, if the EMA is confirmed to be moving upward, while the SMA is still trending downward without turning up yet, it suggests we might have an opportunity to catch the beginning of a minor trend reversal. Therefore, we can add a condition: the EMA must have already turned upward on the previous candlestick, while the SMA over the past few candlesticks is still trending downward. Additionally, since this is momentum trading, the current price must be moving upward, meaning the candlestick is green. Based on the price-volume relationship we discussed, price movements without volume are generally unreliable. Therefore, we'll add another condition at the entry point: the volume must be increasing. Otherwise, if the trading volume at the entry is lower than before, it's hard to be convinced that the current upward trend will continue. Finally, there's what we've previously learned about interpreting individual candlesticks. If the entry candlestick shows a pattern where the price rises but is quickly pushed down, we have reason to believe there's resistance to the bullish trend. So, we'll add another condition. The upper wick should not be more than twice the size of the candlestick body. Our moving average trading strategy design should be sufficient at this first step. For take profit and stop loss, considering the leverage and risk tolerance mentioned in previous tutorials, we'll start by using a 0.32% price change as our take profit and stop loss level. Next, we can let ChatGPT take it from here. We'll let ChatGPT know what we need help with. And the first question, of course, is about the length of the EMA. And based on ChatGPT's suggestion, we've decided to try EMA length of 20. Next, let's ask it to write a strategy that can run on TradingView. Try to share the entry logic we just outlined with it. After pressing confirm, a trading strategy code that can run on TradingView is generated. Now, we go into TradingView and select the symbol we want to view. Here, we choose OK axis BTC USDT, P, which means we are selecting the Bitcoin contract price from the OKX exchange. Then our strategy will be applied to the 5-minute time frame for the Bitcoin contract on OKX. The same product can have slight price differences across different exchanges. Therefore, it's important to choose the correct exchange where you plan to place your orders. If you choose the wrong exchange, there's a high possibility that your entry and exit times, as well as your profit and loss, could differ from what was expected theoretically. Next, open a new tab and select Create New Layout. Then, select Pine Editor and click Open, and then choose New Strategy. Now, the TradingView Strategy Editor will open, where you can edit code. Next, we paste the code provided by ChatGPT into the editor, overwriting any existing content. Then, click Save and TradingView will execute the strategy for us. Many times, the code written by ChatGPT may not be completely error-free. If TradingView points out an issue, there's no need to worry or try to understand exactly where the error is. Take a screenshot of the code and the error message, then send it to ChatGPT. It will figure out how to fix it. Sometimes it might not be fixed on the first try, but just keep sending the error screenshots to it, and it will eventually resolve the issue. Once ChatGPT has corrected the code, we paste the updated code back into the editor. Then click Save, continuing this process until TradingView verifies that the code is correct. Once we confirm that there are no issues with the code, the next step is to remember to click Add to Chart. Finally, we can clearly see the results of the strategy execution on the chart. Based on the recent backtest results from our entry and exit logic, the number of entries, win rate, and profit factor are actually quite good. Considering this is a strategy that hasn't been further optimized, a 61.8% win rate with a 1-to-1 risk-to-reward ratio is a solid result. At this stage, I usually also observe the average bars in trades. This refers to the average number of candlesticks that need to pass from entry to exit. Since we are using a 5-minute candlestick chart, 12 candles would indicate that this strategy typically exits after about 1 hour. For short-term trading, being able to exit quickly is very important. We can also observe backtest results over longer time frames on TradingView. For a 2-year backtest, the win rate is still close to 55%, which indicates that the stability of this strategy is quite good. It is absolutely impossible for an automated strategy to have consistently excellent long-term performance. Therefore, there is no strategy that can be used indefinitely without adjustments. This is an important understanding for anyone looking to use AI for automated trading. Finally, another area to observe is the net profit. We can adjust it to fit our specific situation, making it easier to monitor the profitability of the strategy under these conditions. For example, I'm accustomed to using 1/10 of my capital for each trade and setting a 20 times leverage. If my initial capital is 10,000, it means each trade is equivalent to 20,000. We'll set this scenario and, for now, ignore the transaction fees. This way, we can get an estimate of the strategy's return rate. Based on the backtest for the past 2 months, this strategy can bring a return of 14.11%. In fact, from the start of the video until now, it has been less than 10 minutes. And we've already introduced how to design a basic automated trading strategy from scratch, and completed the backtesting process. Isn't this much simpler than expected? Of course, we are still a few steps away from full automation. And there's also the matter of further optimizing the strategy. But that will be covered in the next video. Alright, that concludes the introduction on how to design a trading strategy. If you found this video helpful or enjoyable, feel free to subscribe, like and share it with your friends.